The Shiba Inu market feels eerily calm, almost as if the entire crypto world is holding its breath, waiting for something big to happen. It's like the ocean before a storm, serene on the surface, but with a sense of tension building underneath, hinting at the possibility of sudden, dramatic change. Beneath the surface, powerful forces are at work, far more than just price swings or social media hype. There are complex dynamics at play, involving not only market sentiment, but also the actions of large holders, algorithmic trading bots, and even regulatory whispers that can shift the landscape overnight. These hidden currents are shaping the future of SHIB in ways that most casual investors never see. It's not just about what's trending on Twitter or the latest meme. There are real, tangible factors influencing every move. This isn't about panic or lost faith, it's about understanding the deeper mechanics driving SHIB right now. If you look closely, you'll notice patterns, subtle shifts in trading volume, sudden wallet movements, and changes in developer activity that hint at bigger stories unfolding. At Shiba Insights, we cut through the noise to empower investors with real analysis. Our mission is to provide clarity in a market often clouded by rumors and speculation, so you can make informed decisions, not emotional ones. My decision to sell wasn't impulsive. It was the result of weeks of tracking subtle but significant shifts in the market. I watched as liquidity pools changed, as large wallets quietly moved funds, and as the overall sentiment began to shift from optimism to caution. The real story is about massive, almost invisible wealth transfers, market manipulation, and risky technological developments. Behind the scenes, there are actors with the power to move markets, and new technologies being tested that could either propel SHIB forward or introduce new vulnerabilities. To understand why I sold, you have to look past the headlines and see the signals that often precede major market moves. It's about reading between the lines, spotting the early warning signs, and not getting swept up in the crowd's excitement or fear. My goal isn't to spread fear, but to share a transparent account of my reasoning, based on the facts as of December 13, 2025. I want to offer a perspective grounded in data, not just emotion or speculation. This is an invitation to think critically, question the dominant narratives, and see what's really happening with SHIB. Don't just accept the surface story. Dig deeper, ask questions, and challenge your own assumptions. Let's break down the data, events, and psychology that led me to sell all my SHIB tokens. We'll explore the key moments, the red flags, and the underlying trends that shaped my decision. And most importantly, let's consider what all of this could mean for the future of the Shiba Inu project, and for everyone who believes in its potential. While traditional markets struggled to find their footing in a turbulent economic climate, Shiba Inu, the meme-inspired cryptocurrency, posted explosive gains that caught the attention of both seasoned investors and newcomers alike. In a matter of days, SHIB's price action defied expectations, surging at a pace that left many established assets in the dust. At its peak, Shiba Inu outpaced the S&P 500 by nearly threefold, and even outshone Bitcoin's returns over the same period. This remarkable outperformance made headlines and fueled a wave of optimism across social media and trading forums. But this kind of volatility is a double-edged sword. It's both thrilling and dangerous. It attracts new money, eager to ride the wave, but also masks the underlying risks that can catch investors off guard. The rapid swings in price can create a sense of euphoria, but they also set the stage for sudden reversals. SHIB's 25% surge in a single week dwarfed the Dow's movement, highlighting just how extreme crypto gains can be. But such rapid appreciation demands scrutiny. Are these gains sustainable, or are they simply the result of hype and speculation? Unlike traditional stocks, SHIB's value isn't anchored by company earnings or tangible assets. Instead, it's driven by sentiment, technological milestones, and the actions of large holders, often called whales, who can move the market with a single transaction. My decision to sell wasn't a reaction to poor performance, but rather a response to the unsustainable pressures building beneath those impressive numbers. When prices move this quickly, it's often a sign that the foundation isn't as solid as it appears. The real question is whether this growth is built on genuine utility and long-term value, or if it's simply the product of speculative fever and viral hype. Without a clear use case or underlying business, the risk of a sharp correction looms large. Sometimes, impressive numbers are less a sign of healthy growth and more a warning that the market is nearing its peak, rather than climbing toward stability. For me, it felt like reaching the top of a roller coaster, exhilarating, but also a clear signal that it was time to get off before the inevitable drop. That's why I made the decision to cash out while the ride was still high, locking in profits and avoiding the risk of being caught in the next downturn. 4 forces are shaping SHIB FUD, Chibarium, Whales, and Voyager. FUD campaigns like recent rumors of a smart contract flaw showed how easily SHIB can be manipulated, even after being debunked. Chibarium's development promises lower fees and faster transactions, but delays and high expectations make it a risky catalyst. Whale activity is rising. Large wallets are accumulating trillions of SHIB, increasing centralization and the risk of sudden dumps. When a few wallets control so much, price manipulation becomes a real threat. Meanwhile, Voyager Digital's estate still holds a massive SHIB stash. The market is bracing for a potential dump of trillions of tokens, which could crush prices. This overhang is a constant, unpredictable threat. These combined risks made me rethink my position. I couldn't ignore the warning signs any longer. On-chain data reveals the real story. Whales are making big moves. When you look past the headlines and hype, the blockchain itself tells you who's really in control. Every transaction is recorded, and if you know where to look, you can spot the patterns that shape the market. Recent massive purchases by anonymous wallets looked bullish, but could be a setup for profit-taking later. These aren't just random buys. Often, they're calculated plays by experienced actors who know how to move the market in their favor. It's easy to get swept up in the excitement, but the real story is often hidden in plain sight. Whales often accumulate quietly, then distribute through smaller wallets to avoid detection. This process, called peeling, lets them offload large amounts without spooking the market. It's a sophisticated strategy, and it's happening all the time behind the scenes. At the same time, early investors are methodically selling off, not panicking, but exiting with precision. They're not dumping everything at once. They're selling in waves, taking profits while the price is still high, and leaving little trace for the average trader to notice. This slow distribution signals that insiders think SHIB has peaked. When you see a price plateau followed by a gradual decline, it's often a sign that the smart money is quietly heading for the exits, even as retail investors are still buying in. I saw 2 forces, new whales buying in, old whales cashing out. It's a classic tug of war, with fresh money entering just as seasoned players are preparing to leave. This dynamic creates a battleground where only the most attentive survive. The tension between them created extreme unpredictability. Prices swung wildly, and every move felt like it could be the start of a new trend, or the end of the rally. It felt like standing between giants. One move could trigger a sharp correction. The stakes were high, and the atmosphere was electric, with every trader watching for the next big shift. Holding on became less of an investment, more of a gamble. The line between calculated risk and reckless hope started to blur, and the pressure was intense. The data pointed to a market on the edge. Every indicator was flashing caution, and it was clear that something big was about to happen, one way or another. I chose to step aside before the giants clashed. Sometimes, the best move isn't to fight the tide, but to recognize when the odds are stacked against you. Sometimes, survival means knowing when to walk away. In crypto, reading the on-chain data isn't just about spotting opportunities, it's about protecting yourself when the market turns dangerous. For SHIB to last, it needs real-world use, not just speculation. Its integration as a payment option in a major NFT marketplace is a step forward, creating actual demand beyond trading. Now, SHIB can be used to buy digital assets, not just held for price gains. But most SHIB trading is still speculative. Real utility is just beginning. To truly matter, SHIB needs many more integrations across e-commerce, gaming, and DeFi. The foundation is being laid, but the prices run far ahead of actual utility. I saw promise, but also a market pricing in future success that isn't here yet. The skyscraper is rising faster than the foundation can support. That imbalance was a key reason I sold. I'd rather watch the foundation grow from a safe distance. Investing in SHIB is as much about psychology as charts. The SHIB Army's enthusiasm is powerful, but it can create dangerous groupthink. Skepticism is often dismissed as FUD, and critical questions get drowned out by hype. This is classic market top behavior. When everyone's celebrating, big players quietly exit. I realized I was becoming exit liquidity for whales, not investing on my own terms. Respect for the community is important, but passion doesn't change market fundamentals. The emotional energy had disconnected SHIB from reality. Stepping away was about discipline, not cynicism. I chose data over hype and clarity over crowd mentality. Sometimes, the smartest move is to leave the party early. My SHIB journey taught me the value of discipline and independent thinking in crypto. Selling wasn't a doomsday call, but a personal risk decision. The lesson: build your own thesis, act on it, and don't get swept up in the noise. Use data, question narratives, and stay aware of market psychology. The story of SHIB isn't over. New developments could change everything. Stay curious, challenge your assumptions, and keep learning. The best investors understand the present, not just predict the future. With clear analysis and discipline, you can navigate even the wildest crypto tides.